Welcome, folks. This is Tom O'Brien broadcasting live from the Hot Asset Show, beautiful San Francisco. Our guest today, Mike Hoffman. He's the CEO and president of Crocodile Gold, trades in Toronto under CRK. Mike, welcome to TFNN.
Thanks very much, Tom. Glad to be on it.
We appreciate you being here. You know, tell us, I've been doing this in this gold business a long time now, and you got a unique story because, I've seen lots of gold companies, come out. Tell us about how you got this piece of land and where this piece of land is.
Basically, we're based out of the Northern Territory of Australia, so it's the top middle of Australia.
Yes.
And we basically got these assets in early 2009, right after the big economic crisis.
Right.
And the previous operators had up to a $600 million market cap, and they basically went bankrupt in the fall of 2008. So they needed to raise money in the fall of 2008. They were over-leveraged. They needed to go to the market. They couldn't raise debt. They couldn't raise equity. As you remember, nobody could do any of that. And so we actually went through a bidding process, got these assets, and the rest is history. We raised, over $125 million. We put the assets back into production.
Yeah.
And now we're going to be growing the production from 85,000 ounces this year to over 200,000 ounces in 2012. So really good growth story, lots of land, large resource. We've got over 5 million ounces and counting right now. Been aggressively exploring. We'll see that higher by the end of the year.
And who would ever think that when you go from 2000 to 2008 that you ever could get a deal like that again, right?
Oh, we paid 50 million Australian, and we got a 6,700 ton a day mill.
Right.
We got another mill that's 240,000 tons a year, plus over 4 million ounces of resource for less than 50 million Australian.
Amazing.
So we paid $9 an ounce. So if you go to buy most resource companies now,
yes,
you're looking at over $200 an ounce.
Exactly.
To try to buy a resource company.
That's
so,
right, 235. I know what you're
so
saying.
five cents on the dollar we bought these
Good for
assets.
you. Amazing. And what is your background?
A graduate mining engineer from the early 80s, so
Okay.
I did a cross-Canada tour, was a vice president at Yamana Goldcorp.
Yes.
So a large part of our management team is former Goldcorp.
Okay.
So we wouldn't be here unless we thought there was something we could do like we did at Goldcorp again.
Amazing, absolutely amazing. So we're doing business in Australia, and of course Australia now has that strong dollar, okay?
Yeah,
that's a challenge, right?
It's appreciated quite a bit. It went from 65 cents to the U.S. when we first took over to now it's almost par. Fortunately, the gold price has gone up too. So
yeah.
So we've been able to manage our.
Anyway, I'm with you.
Well, I hope so, but we've been managing as far as our cash cost to be fairly consistent. We've come up with some innovative ways to reduce them. So going into next year and the year after, we'll keep those cash costs down.
Nice. So tell us now, production-wise, where are we at?
This year we'll do 85,000 ounces. The cash costs will be a little bit high.
Yes.
Probably over $900 an ounce for the year.
Okay.
Next year we should be due probably between 125 and 175, 175,000 ounces. Yes. About 750 cash cost. And then the following year will be over 200,000 at 650 cash cost.
That's nice. So you have a big acceleration going up. How does that happen? Why is the acceleration so large?
Well, the big key for us is we're developing a large underground resource at Cosmo. Okay. And that just Cosmo on its own will produce 100,000 ounces a year at 450 cash costs.
Nice.
So for us, that's the crown jewel of the assets.
It is.
The previous operators always talked about developing it, never did.
Right.
So the minute we got a hold of these assets, we started working on them. We're developing their underground, and we'll be producing gold from there next spring. So.
And is your mill close to that also?
It's about 90 kilometers away from Cosmo, but we're also developing some new open pits right near the mill.
Yes.
So we'll start one early in the year called International in the Pine Creek area, and that has the advantage we're not going to be paying the trucking cost. Plus it'll be lower strip ratio, so it will be lower cash costs there.
And in Australia, what is the energy cost like in Australia?
I would say it's a little on the high side, to be quite honest. It's probably 14 to 16 cents a kilowatt hour.
Okay.
So a little on the high side. One thing into the future we could look at is we've got a gas line running through our property. There's small power plants that are available that you could get a company to operate for you, and you could drop those power costs down to 8 to 10 cents a kilowatt hour. So,
what is the aspect? When I interview all the CEOs, right? It seems like I haven't had a lot of Australian CEOs, right? So can you give me a little history? I mean, I know Australia has huge amounts of resources, right?
Yeah.
Why is it that the Australian resources just don't make it to the United States, or why is that?
I think there's a lot of companies that never get listed in the US or Canada, and they're listed on the Australian Stock Exchange or Hong Kong or Singapore.
Right.
And so those Australian CEOs would stay in those with those companies.
Okay.
Obviously, I don't have an Australian accent, so I'm Canadian.
No, it's great to know. It's great for people, you know, in the United States that they can get a piece of that, because when I look at it, I mean, everyone knows Australia, resource-wise, is huge. I mean,
oh, absolutely.
That's why the dollar's so strong.
Oh, it's the second largest gold producer in the world too, after China, which a lot of people don't realize. So there's a lot of gold there. There's not as many juniors and intermediate gold producers as there was. Okay. So it's a really great opportunity for us to actually form a new intermediate gold producer. Like we've got a huge tenement package, 2,500 square kilometers. We've just touched the surface of that exploration package. We've already got over 5 million ounces. So
that's amazing,
we believe we're going to find a lot more by the time we're all done. And a lot of it's shallow. It's all open pittable.
Yeah, and of course, what ends up happening in an open pit, I mean, you can go from one to the next and say, okay, what's over this side of my backyard, right?
That's exactly it, yeah. And you get the benefit sometimes with oxide. It recovers a little better than the sulfide, so, you know, we've got all that. If you get them near the mill, of course, it's a little cheaper, so we've got all those opportunities, and very underexplored. Like, most of the exploration all occurred in the 80s and 90s, so.
Isn't that cool?
Yeah.
Now, what about help? You know, labor.
Yeah, you know? I think, you know, any company you ever talk to these days, you know, to me, one of the biggest challenges is people.
Okay.
You know, I don't care who you are or what you are.
Right.
We've got a growing resource business. We've got people that are retiring. We've got to bring in young people.
Yeah.
So we're very fortunate. We've got some very motivated young people. We're bringing in young people and training them, and then we're developing new leaders. So we've had some turnover initially, but it's stabilized quite a bit in the last number of months. Got some very good people managing everything in Australia for us. So it really makes a big difference.
And you know, it seems that even, you know, we're into this like 10 or 12 years now. So that's helping too, right? I mean, because you get some young 30 years coming out. I mean, there's going to be a lot of bright people coming out of your mining schools, right? I mean, wouldn't it seem that flow would start coming here now?
Well,
right?
And of course, you know, people going into school too, if they see there's a good career and good job prospects, they like to go into it, and then they're going to get a job out of it.
Right.
So for us too is, you know, we've got the added attraction. We've got open pits, we've got undergrounds, we've got a large land package, lots of exploration upside. So if you're looking to build your career, it's a great place to go because, you know, there's all the variety.
Sure.
And you're not working for a big company where you're stuck in a little job with not a lot of latitude. You know, we empower a lot of people, so it, you know, it makes it easier to attract good people.
What bringing out of the ground, Crocodile gold, is it mostly gold you bring it out? Do you have silver? Do you have any byproducts?
A little bit of silver, but on our property we actually have a fair bit of uranium, and we have a joint venture with another Australian junior, two of them, one called Rum Jungle, one called Thundalara. Thundalara has been very successful with uranium exploration.
Yes.
And we have a 30% carried interest on that uranium exploration. We also have some base metal assets on our property, one called Iron Blow, that's lead, zinc, copper, gold, silver.
Nice.
And it's probably average gold equivalent grade of about 4.5 grams. And so that's wide open. So we've got lots of potential.
Yeah, and that's other demand, which is really cool.
Mm-hmm. Oh, for sure.
The fluctuation, particularly in China.
Yeah.
I mean, that no matter what happens with precious metals, you know, base metals are going to keep going.
Well, we've got a deep water port in Darwin, which is, you know, an hour and a half from the site. So if we ever had to ship base metals, it'd be very easy to ship it to the Far East.
That'd be a beautiful thing.
Yeah.
Listen, folks, this is Mike Hoffman, Tom O'Brien. You know, thanks for being here. It's Crocodile Gold, trades in Toronto, CRK. Mike, thanks so much for being here with us. Appreciate it. I look forward to seeing you again.
Okay, thanks, Tom.
Thank you. Thanks, folks.